Well, hello everyone. This is Wells Matera, your favorite Forex trainer and coach. I'm going to go ahead and do a session with you guys today. Um, didn't quite do it earlier today, so I'm going to do it now and post it up on my channel. So by the time this recording is done, it'll be completed and you're watching it. Um, we'll resume the live trainings next week, Saturday at around 1 o'clock. I'll let you guys know. But as far as giving you the training, I'm so grateful that you guys are able to go to my channel and watch the replay of the day's session, right? So, welcome to another Forex Bootcamp training. And let's dive into analyzing and looking at Bitcoin, BTC USD. So we'll break this down for today's session and see what we can find. I'm going to give you guys some pointers, some new pointers, something I haven't shared with you guys before. And this, you might find this beneficial, and you might want to add it to your training plan or strategy as well. So let me take a tool here over here, and we're going to mark up the highs and the lows, and then see if the actual trend changes based on the highs and lows. And we're going to also see if we can see any breaks in structure. Because if you look at the market right now, based on the daily, it looks like it's going sideways, right? But within this sideways movement, we have to determine whether there's any downtrends that's going on or possibly uptrends. So let's take a look at that. So if we take that tool, we can mark up, looking at the left side, we can mark up the high, which is right here, right? And then we can come straight down this downward trend, all right, and mark up the low. So I'm gonna I'll keep that green, maybe like a darker green, right? And then we're gonna mark up the low. So this high, this is a downtrend right here, and it was a low right here, right? So in order for this downtrend to continue, we have to see, lower lows, right? Now, if the market goes above this line right here, it's a potential uptrend, right? So we're going to move these two lines based on the actual trend that this market is trading in. Okay. So if we look at here, where is there a low? So we actually we put a high here, put a low here. And then we move this one here over here to mark this area. But it didn't go past this high, right? The last high that we just put in here. Okay. And then it pushed down from here. It pushed down and made a lower low right here, right? Because this low is lower than this low. Okay. And then it pushed up a little bit. So we're going to move this line and move this right here. Okay. You guys could practice this when you do your back testing. And then it shot back down lower than this low. So we move this line here. And we're doing this to see if there's going to be a change or market structure change or market structure break. So as you can see, when it came back up, it broke this high that's over here. All right, so now we're going to move this up here, mark that high, okay? And then since we have that high here, what caused this high? The base was right here. So we're going to move this right here, okay? Well, look what happened. It didn't create a higher high because we know that it didn't go higher than this area here. But we do have a double top right here. And it bounced off, we could call it resistance level, right? It bounced off this resistance, going straight through support. And now we're going to move this line where? Down here. Actually, lower this than this low. So down here, right here, right? And then it pushed up and went over here to this high, right here. And then what did it do? Actually, push lower right here, right? So move this here, right? And then when it pushed back up, by moving this here, that's what we're pretty much looking at. Okay, so then what did it do? It came all the way down here, did not go below the green level here or support, and it's pushing above, right? Going straight up to either make so to either make a higher high, okay, or bounce off this green line to make a lower low. Okay. So in order for this to be a market structure shift, look at what happened here. So when the market reached here, it came down, but it never went below this area to make a lower low. Okay. So when the market reached right here, it pushed up, then it came down. Let me take this off real quick. Right? And then what happened? Pushed up, came down. Then now you have a market structure shift right here. Because this high is bigger than this high. So you have a change in the trend right there by just having this area being higher than this area. Okay. And now we put this up here. And we keep this down here. Because had it created a lower low, lower than this area here, it would have continued its downtrend. But it didn't. Okay. So now the anticipation is, will it go above this area or bounce off this line and go below this area? So you have two options, right? And this is based on the daily. It's based on the daily. Now let's go down to the 4 hour to see if we can find any change in trend in the 4 hour. All right, so if this is the high and this is the low, and it never really broke below this area here, right? For it to continue to be a downward trend, you can see that we have a change in structure in this trend. Because look at this. If you look at right here, this area broke this area right here, right? So that area broke this area right here, which caused there to be a change in the trend. Now it's an uptrend, as you can see. It did consolidate right here, but never went below this green line. So it's an uptrend. As you can see, it did break higher highs. So now this high is now over here. So I could leave that candle line over there. Okay. But where do we move the low? We move the low right here at this lowest low right there. Take away this line. Okay. So what happens now? All right. Based on the 4 hour, we have a high here and a low here. And what happened? It came all the way through this low. So we're going to make this the lower low over here. Okay. Now this is the high. If the market goes to this area, because there's a change, right? Because remember, it's an uptrend right here, because we have a change of structure over here. This is all considered uptrend. In order for it to be a downtrend or change in structure, it has to go below here. So this whole area is an uptrend, okay? This whole area. Even if we take our Fibonacci tool, take from the bottom to the top, you'll notice Then it bounced off 0.79% over here. Okay. It really didn't really go through it in order to go below that area. So once it bounced off that area, it continued its journey going higher, right? All right. So that's a great way to use the Fibonacci tool. So all we're looking for, okay, because we have an uptrend right here. This is an uptrend. So in order for it to be a downtrend, it's got to break below this area right here. It's going to break it. But since it did it stopped right there. And because it stopped right there, it trended higher. So you're gonna have to be a little bit more patient. Now let's go down to the lower time frames to see how you can actually take a trade going up, right? So let's go to the lower time frame to see if we can enter the market for possible bull trade, uptrend trade. So we're gonna go down to the 1 hour. And then you can see in the 1 hour, it's actually bouncing off this trend line that we put here. Just adjust it a little bit. You can see bounce off, bounce off. We can make it bigger. Okay. Pretty much bounce off this trend line. And what would you enter? You enter on the retracements. Okay, the retracements. Okay, but since we're up here, we're anticipating the market to do one or two things, right? Either go up, bounce back off this trend line. So in order for us to really take a trade on this, we have to place our order blocks. Okay. Let's place our order blocks. Typically, I place my order block whenever I see a strong big candle right like this. I go down to the order block, which is this one right here. And look at that. Here's the order block right here. So I'd mark my order block right here. And then between this candle and this candle, we have a fair value gap because this candle did not touch this candle. So the market has to come back and fill this gap. Okay. At some point or another, it's got to come back towards the trend line to fill this gap. Okay. So you would wait for the market to come back down to the zone before you take a buy trade. All right. So there's two areas. One, and go back up. Or two, and go back up. Okay. Now, if it breaks this area altogether, then it's a reversal trade, right? So it's going to go down. All right. So those are your areas of interest. So I had to wait patiently to see if the market would come down to this area. Now this is a 1 hour time frame. Let's go down to the 30-minute. Okay, because you can do the same thing for the 30-minute. You could put your high here, and where's your low? Right there. Okay. So it's an uptrend. So we're looking for bounces off the green and bounces off the yellow and bounces off this yellow. These are the areas of interest. Okay. Now, if it does one of these numbers, go straight to the green, you're going to go back up to touch the green, and then go down here. That's one prediction. Okay. Or it'll stretch out and go down here and go back up. That's another prediction. So this all predictions because we know the market is an uptrend. So we want to place our trades based on possibility of it continuing to go back up to break these levels. Okay, and that's what I would be looking for. So in actuality, if we go down to the 15-minute, what is it doing? Consolidating. Remember, I said never enter the market in consolidation. It's a consolidation right there. It's trending sideways. That's what we call the consolidation. Consolidation. But in the 5-minute, you'll either wait for the consolidation to end. So adjust it real quick. Right? Consolidation will end when what? It breaks this area. Oops. Goes up. It's the consolidation level. It goes up. Bounces off the consolidation level and goes up. That's one prediction. Or it breaks through the consolidated area here, touches it back, retrace. Remember, you're into the market on a retracement, and then it goes lower. So you gotta wait for the breakout to happen before you take a trade. Okay. Now I wouldn't take a trade until it goes down to those yellow areas for an uptrend continuation. Okay, based on the Fibonacci. Okay, so yeah, this is my paper account. I grew it to $7.6 million, and I only started with $100,000 capital, which is pretty nice. And I'm continuing to practice. I am on actually doing a challenge right now. I'll give you updates on how well I'm doing on the challenge. And I'm going to start funding my live account. Every so often, I'll throw some money in that, grow that account as well. So that's a great way of being your own bank. So you'll, open up a live account, throw anywhere from 10, 15, 20, 30 bucks, $100, 200, 300 bucks, whatever you got. And if you're confident enough, you'll trade that money and try to trade it into a higher amount. So you'll turn like $50 to 100, $25 to 50, just to test your skills. I wouldn't put any large amounts of money into a live account until you have consistent wins in a demo account, and your ratio is where you want it to be as far as your profitability ratio. 70% or higher, 65% or higher is what you'd be shooting for. If you find that your losing ratio is lower than that, then I wouldn't open up a live account. I'll stay in a demo account, but you can always purchase a challenge account, and I'll be putting my link in the description area of what company that I'm actually taking a challenge with, and I'm also an affiliate of that company, and I encourage you to try them out as well. I think they're one of the best companies out there. I mean, let me just show you my challenge account real quick. Okay, so I went ahead and logged into my challenge account. Current balance right now is $10,028.13. I purchased a $10,000 challenge account, and already had some success with the challenge account, which is pretty nice. But let me show you the Analyst Hub. I like this back office because it breaks down everything. I mean, how many number of trades you take in, your greatest loss, your greatest profit. Okay. And if I go to Trading Journal, they keep all this. I'm at 66.67. My winning percentage, 66.67. Okay, 12 trades. 12 wins, 6 losses. Okay. My P&L, $28.13. Okay. So everything's back here. I mean, they break it down to the minute ridiculous data. All right, so the 13th was my first day of trading, and $28.13 is how much I made that particular day. They give you a whole calendar. Yeah, I'll be putting the link to this. It's called Think Capital. I think that this is back off of, as well as most impressive. I like all the data it provides. Unlike the other companies, they can't compare it to this back office. It's amazing. Gains and targets, like right here. My target is $700. Okay. Once I make $700 in total profit, and this is a demo account, by the way. Once I make $700 in total profit, I would have passed phase one. This is a three-phase challenge. Okay, very inexpensive, and they refund your money back once you actually pass the challenge, which is nice. So I have to make $700 in order to pass phase one, and I can't lose no more than daily loss limit is $401. Overall drawdown, I can't go below $800 at all, or the challenge would have I would have failed the challenge if it goes below $401 in one day. Or overall drawdown is $800. So you want to stay away from these numbers, right? Try to make as much profit towards 700 in order to pass the challenge. Because once you pass every phase, they give you a live account, and then you would split the profit with them going forward. Okay, which is really an inexpensive way to actually, you know, trade money that's not yours, but they split the money with you once you've proven yourself by passing the challenge. Okay, so there'll be a link in the description area. So you guys, if you want to try this company, Think Capital, you click on the link and it'll take you directly to um, the main page, and then you can go ahead and sign up for a challenge, see what you have learned from my videos. Apply what you've learned to the challenge and see if you can pass the challenge going forward. You got $5,000 challenges all the way up to $100,000 challenges. So definitely get in where you think you fit in as far as money you could afford to lose, right? Because you never want to trade money that you're using for your bills. Rule of thumb: do not trade money with money that you use for your bills. If you have discretionary money you're willing to just spend on these challenges. If you fail the challenge, you're not sweating any bullets. Okay, so I think that's good advice. I had to learn that the hard way, but that's good advice. All right, so this is my challenge. I wanted to share that with you guys because I'm practicing what I preach. I mean, I have the demo account, I have a challenge account, and I have a live account. Okay, and I'm going to be adding more funds to that live account. So I'm just trading the demo account, and then when I pass the challenge, right, this challenge, the money that I split with this company, I could use that money and put it in my live account, and then now I have two accounts that I'm actually trying to build to a nice profitable margin. That way I can start making some withdrawals and start getting my dreams. All right. So with that being said, everybody, let me go back to the chart. Okay, so we're back at BTC USD. So as you can see, like I said, it's in consolidation. So you gotta wait for a breakout to happen before you take a trade. So I don't know when that's gonna, it's been in consolidation for a while with this market here. So you gotta wait for a breakout. Okay. And it can happen within the hour, it can happen within, I don't know. All right, so that's my actual analysis, BTC USD. Okay. Again, I'm looking for it to go higher, past these levels here. Okay. Because again, if you pull out the Fibonacci, you'll understand what I'm saying. You go from the low here to the high here, stretch it out, and it's hanging out around 0.79. Okay. That's an area where the market can reverse and go higher. Okay, then so that's one way of looking at it. So I normally, you know, fixate my strategy or my mind on 0.68 for a bounce to go up, which it currently did right here, and then 0.79, which it did bounce off a couple of times. Because this area, right, the market has a hard time breaking through that area because there's a lot of buyers down here. As you can see, the liquidity, a lot of buyers right here. They're pushing the market up, pushing the market up, pushing the market. That's why you see these long wicks because they're pushing the market up. Okay, so I definitely, would wait for the breakout. If it breaks above, that's great because it'll continue its upward trend. If it breaks below, then it probably needs to hit 0.79 again before it bounces off there and then goes up. Because remember, you're looking for two candles. If it breaks above the consolidation box or area, you're looking for a bullish engulfing candle. If it breaks below, okay, you're looking for a bearish engulfing candle. Okay, so keep that in mind before you place a trade. All right, y'all. That was it. Very simple, very clean. Not a lot going on in the charts as far as marking up the chart. Kept it very simple, and I put my lines for predictions. Okay, this is more like a swing trader line here. If you're a day trader, you're focusing on, you know, the daily. If you're a scalper, you're focusing on the 15 minute, 5 minute, 3 minute, 1 minute. Okay. So, all right. So that's my training for today. Thank you so much for watching. Don't forget to subscribe to the channel and hit the bell button. That way you get notifications of the future videos that I do. Don't forget to give a thumbs up if you like this content. And then don't forget to share it with your colleagues, friends, associates, coworkers, everybody that you think would be interested in learning how to trade the Forex market. So with that being said, thanks again for watching. Come back next week for another training. And in between the weeks, I'll be adding more content to the channel as well. Thank you for subscribing if you're a new subscriber. And if you're considering subscribing, go ahead and do it. Go ahead and do it. This is just another perspective of all the other different perspectives that you see out there that you could possibly add to your arsenal. Okay. So with that being said, thank you again for watching, and you all have a fantastic trading week. Take care. Bye for now.